Good morning, everyone, and happy Friday. The market is not looking good today. A lot of stocks are trading lower. There's still a lot of selling pressure going on. The banks had earnings, and it wasn't too good. So we have a lot of selling pressure today. As I said, most stocks are trading lower this morning. I will say, Tom, sometimes when we see this, we see like a big drop at open and then stocks pop up like throughout the day. But besides that, it's not looking like a good Friday.
Yeah, I was kind of looking for that little bit of a bounce at market open as well, Mike. It looks like the SPY kind of hit this support down here. And I will say the banks look like they're also kind of down by support. Yeah, the banks did not have a good earnings. JP Morgan, like we talked about earlier, they actually beat on their expectations, but there was a little bit of a weird reason why they beat on it. Apparently, they would have came just under it had they hadn't released some weird loans. But in the end, I'll bring up the article in a second. But either way, JP Morgan tanked down. We also saw Citigroup tank down. But I will say Wells Fargo actually held up a lot better than those two. So that's good to see that at least one of them ended up holding up. But with JP Morgan going down, it also dragged Bank of America down and Goldman Sachs down. And those are two also pretty big banks. So we'll have to see how this ends up materializing. But, it just sucks to see the banks down like this. I think a lot of people were expecting them to do a little bit better. And, the earnings weren't that bad. Like I said, JP Morgan reported decent numbers. Their revenue was right on par. But I guess it was just that one weird thing that came out. And I guess I'll go ahead and read it off just so, we're not sitting here wondering. And they actually said that it says that JP Morgan said it took a $1.8 billion net benefit from releasing reserves for loan losses that never materialized. And without that 47% share boost, earnings would have been $2.86 per share, which comes in under the $3.01 per share estimate. So that's I guess that's the reason why they beat. But in the end, they still beat. So it's just it sucks to see that. And then they just had a bad outlook for the next year or two.
Yeah, so great information there, Tom. Looking across the board, like you said, there's definitely some stocks taking a beating, especially with the bank stocks. Looking at a couple other plays, how about this action with Apple this morning? We could see earlier in the morning it was tanking down, and now we're about to go green.
Yeah, we are. It's coming right back up. I'm pretty surprised to see this, especially as lots of these stocks are just continuing to go lower. But yeah, it's nice to see that Apple's coming back, Mike. And Apple got pretty close to $170 earlier this morning, and I just could not believe the way that all these stocks were selling off. So I'm glad to see them coming back. It looks like most of my watch list is red, but we do have a few of them up in the green. And Mike, I know one of your favorite, well, I shouldn't say your favorite, but we've talked about it quite a bit lately over the past few weeks and few months is LVS. And Mike, they are on fire today.
Yeah, it's running up pretty big. There was actually some great news out of China, with Macau. I think there was a lot of uncertainty with how they were going to regulate that region of China, and apparently it's really good for these hotel stocks. I think Macau said they were going to have a maximum of six licenses or something along those lines. But either way, it's really benefiting LVS and Wynn this morning. Like Tom pointed out, they are up a lot. Wynn's up 7.2%, and LVS is up 13.5%. This is pretty big. Like I said, the stock is exploding up. There's a lot of momentum with it. I will say options are still a little bit expensive though, so it's it's good for short-term plays, but still, if you're going to swing it, I think shares would be a lot better. Or if you did decide to go with options, you'll probably want some sort of spread because, when you have a 57% implied volatility, which is not crazy, but it's still relatively high, and it's just you're paying a premium.
Yeah, you're right. I think it'll be better too, especially as we get up to some of these resistances. It looks like with LVS, we're getting pretty close to $45 here on the daily chart. And Mike, we're actually getting pretty far off these lows now. These lows down here around $35. I mean, we're starting to rise pretty significantly all the way up to $42 with this huge gap up here. These stocks are starting to really move off these bottoms, which is great to see. And I really hope people were sometimes picking up some shares down here. I think it would have been really good for some of these beaten down casino stocks.
Yeah, no doubt. But yeah, looking at a couple other plays, I will say one that's pretty interesting to me is let's say we look at Disney really quickly, Tom. So far today, even though we had a lot of stocks gap down and open at like not a good level, a lot of companies are rebounding now, right? Like, we have multiple companies that are very close to going green, but Disney, on the other hand, is struggling. And I was reading about this one this morning. So they got downgraded. Guggenheim downgrades Walt Disney to neutral and announces a price target of 165. So it's like Guggenheim has been doing all of this like upgrade and downgrade action over like the past couple months or so, but it's like I just feel like it's very interesting like how like any one institution or company can upgrade or downgrade a stock, and then the next thing you know, that stock is doing worse than not almost any other stock on my watch list, but it's like on a day where at least companies aren't like totally bleeding like Disney is just because they had that downgrade.
Yeah, definitely. That's a really good point. These downgrades have been a really crazy thing over the past few months. Like some stocks have been helped from it, but from what I've seen mostly stocks going down from it, Mike. I guess it's just because we're always into these growth stocks, but still, I mean, it's crazy to see how these banks can affect these stocks in such a large way. Like whenever they do these upgrades, downgrades, and different stuff like that. I know I've seen Deutsche do a couple over the past like couple of weeks too, and yeah, it gets crazy. But it sucks to see Disney going down like this. It looks like they're kind of following JP Morgan down today, which is kind of crazy. It just I wouldn't have expected that from Disney. I would expect Disney to maybe hold up a little bit better, maybe like a Target or a Starbucks, and maybe just look a little bit better today like these ones are. Disney just has been selling off so drastically lately, Mike, and they even had some pretty good news come out there for a while over the past couple of weeks, and it looks like they're just giving it all back now.
I know. And then Jerry said they're controlling the market, and then he said happened to snap. So Hunter and I were looking at some like unusual options activity like probably months ago, and then one day we saw like a good amount of, I don't remember if it was calls or puts, but it was a good amount going into the options chain. And then like a couple of days later, a company had like a huge double downgrade or double upgrade, and then the stock moved in a huge way. But it's like, I just feel like it's interesting how sometimes these institutions can just, send out a couple upgrades or downgrades. The next thing you know, the stock's moving huge in one direction. But, I guess it sucks if the stock's falling. But then again, like, if it's a company you don't mind holding, I guess it's just an opportunity to, maybe buy shares or something along those lines.
Yeah, and it looks like on some of these stocks that are falling, Mike, they're starting to break some pretty major supports. And one that I wanted to talk about today, Mike, was actually AMC. I'll tell you, it looks like we're actually falling below the $20 support. I know that this support has been key for AMC investors over the past few weeks, and man, we're starting to move below it. And I know AMC looks like it's coming back on the green candle here, but wow, I mean, we're down below $20 a share now. Like, this is the lowest AMC has been in a long time.
Yeah, Tom, look at that. Down below 20, and like it's kind of like trending like, or not trending lower. It's definitely trending lower, but it's like really close to breaking in my opinion. Like, I feel like over the past year, like we've just been like slowly fading off with like a couple big pops, periodically. But besides that, like I feel like it's just not looking good, and it's kind of sad because I feel like this is like a pretty big support level, and like if it does break, I mean, I can definitely see a lot of people who are holding this one just closing out.
Yeah, definitely. Like I know $30 was also a big one. And once that broke, I'm sure a lot of people sold out there. And I'm sure they're going to really sell out when 20 breaks. I know 20 was a huge level going back to that first pop that AMC had all the way back. Like, man, this is a long time ago, like last February, just about whenever they had the first initial run to the upside with GameStop. They established that nice $20 level. And yeah, now that we're breaking that, it's not good. And if we see a sell-off really start to accelerate, I'd be really careful with this one, guys, especially if you're trying to play the support. Like, I would definitely not be buying this right here at all. If you're, looking to do that, I would definitely, maybe look for a break to the downside, maybe try to play it for that. Or honestly, like, I'm not going to play it at all, but I know that a lot of people probably already have positions in it, and, hopefully they get helped out a little bit.
No doubt. Hunter said, oh no, who could have predicted it wasn't going to 10K? Oh gosh. Yeah, it's looking pretty rough right now, and I know I said this a million times over like the past, past couple months, but the lower the stock goes, the less likely it is to short squeeze, so it's not looking good. And then we have a great comment from Sam saying, just want to say thanks for your daily stream. Yeah, we have a great time doing this, Sam, and we really appreciate everyone out there who joins, like everyone on the stream now. We really appreciate all you guys, and we're happy to do this. So thank you guys so much for joining, and just let us know what stocks you want us to cover. We could definitely take a look at them. But Tom, looking at some of the overall movement today, I will say that it looks like these China stocks are trying to pop back up. It's not anything crazy just yet, but it's okay. It's not bad.
Yeah, you're right. Baba's starting to climb my watch list, which is great considering how they were looking a little bit before open there. I know they were retesting this like 130 support in pre-market. Looks like it actually had a pretty good bounce there. So yeah, maybe these will be pretty good plays. I know Baba's doing good. And then Mike, I actually have NIO back in the green. This is great to see. I know they were having a terrible pre-market, so I'm glad to see them coming up along with XPEV. I know XPEV has been a pretty hyped up one lately too.
There we go. Yeah, that's awesome to see. But I will say, just like across the board, it's not like we're seeing like any crazy movement just yet. Like, I think it's awesome that we're finally seeing companies like at least try to rebound. Like, I know you had Matterport on the screen and even AMD. Like, I know we opened pretty rough, but it looks like a lot of buyers did come in, right around open. So I'm curious, is like, can this movement or can this type of price action, hold for the rest of the day? And part of me is a little skeptical of it, considering the bad movement we saw in pre-market.
Yeah, and I don't know like if it was just the banks really causing that movement, but I guess it really was. Like when you start to look at it, like once JP Morgan them started selling off, we started seeing, AMD and everything like that start to go down too. But it's just it's just a terrible thing to see. And honestly, like if we see the banks, I think, start to come back up intraday, I think it might help the market out a little bit. But yeah, as of right now, I mean, the SPY looks like it's doing decent. I will say though, as we head up today, we're going to head up into some of these pretty big resistances. Looks like 463.50 is the first one I have on the chart. And then after that, I'm definitely going to be watching right around 466.
Sounds good. We have California back. So he said, morning fellows, I'm back. I'll try not to blow up my account this time. LOL. Well, welcome back. The market is it's interesting right now. Like there's a lot of great opportunities in certain areas, and there's a lot of risk in other areas right now. So it's like, we're seeing a lot of selling pressure in a lot of stocks right now. I know Tom has Roblox pulled up. Of course, Roblox has been taking a beating. Disney's been struggling for the most part. Matterport, Unity, DraftKings, Zoom. So it's like there's a lot of people, I guess you could say, there's a lot of fear in the market right now, which can be a huge opportunity if you play it correctly. In my opinion, shares would be ideal, especially with the high implied volatility on a lot of these stocks right now. But, I feel like just scooping up some shares at these levels would probably be the best way to go, California. Like, it doesn't have to be any of the stocks that we suggest, but there are a lot of stocks at pretty low levels right now. And, if you have a company that you really like for the long term, odds are it's at a good level right now.
Yeah, especially if you can just hold it for like a year and just almost forget about it. Like that's going to be the best way to do it, honestly. Like if you're going to get some shares or something, just get them and then honestly just let them sit for a while. Try to put it in the back of your mind, for a couple months and maybe come back and you might be pretty happy. But yeah, I mean, it's going to be hard for the next couple of weeks, Mike. It's just we have all this crazy data coming out. Rates seem like they're going to be going up soon. Apparently these analysts are really targeting like mid-March now or something like that for these rates. So I don't know. We'll have to see what ends up happening. But it's crazy to see how we went from transitory now to having to deploy all these like tools and stuff to try to lower inflation. So it's crazy to see what's going on. And obviously these growth stocks are still taking hits, Mike. I know they're trying to pop back up today, but man, DraftKings is in the red again today. I know they're popping back at open, but it's rough to see them going down with especially as we saw like Apple and those stocks start to drop this week too. Like, we were looking for that transition and not a sympathy move there.
Yeah, I know. It's weird. It's weird and it sucks. Gosh, like even if you look at Zoom, like that one is holding up pretty well. It kind of looks more like Apple intraday. Like it had a bad move in the morning, but besides that, like there's been a lot of buyers straight from open, but then again, it's like Zoom will have this type of move and then it'll just give it all back by the end of the day. So I'm hoping that it can kind of hold up. But I mean, Tom, Zoom at 164, like just like, what was it, like last year or like a little over a year ago, this stock was at 588. Now it's at 164. Like, that's crazy. Like, I understand, like, Zoom was overvalued at 588, but it's like, I feel like it's getting a little bit too low at this point.
Yeah, and even within the past few months, we were around 400 a share. Like, it's just crazy to see how much they've been giving back as far as their valuation's concerned too. Like, it's just crazy to see how low they've been getting. But yeah, I mean, their earnings have been holding up well, which I like personally, which is good. So yeah, I mean, there's a huge support around 150. Maybe we'll hold that. And honestly, I'm really looking for Zoom to turn around, Mike. And it looks like that implied volatility looks like it's back on the rise here. Like, if we get back up to 75, 80%, it might be too late for some of these options.
Yeah. All right. So then we have Sean saying, do you like Neo for a day trade if it breaks 31.22? Let's take a look. 31.22. I don't know, Tom. What do you think about this one?
Yeah, I see a little bit of resistance there, like right around 31.22, 31.25, you could say. Yeah, if it does break that to the upside, I think it can be pretty decent. My only concern is just that, we have all these stocks down today. Neo and, their sector, the China EV stocks are doing pretty good. But I will say, though, as Neo goes up, we're going to be popping up into some of these pretty key resistances. So if we break 31.22, we're going to have a huge resistance at $32. So, if an 80-cent move is worth it to you today for some of these options, then it might be a pretty good day trade. But personally, I'd be careful with it, because as we start to break this to the upside, I really feel like that we might start to hit a resistance like 31.50 or 32 and then start to slow down today. And that's really all I'm concerned about.
Cool. All right, good stuff there. I will say, Tom, DWAC just popped up on my scanners. It looks like this one's not going down without a fight. Like, I know yesterday it didn't really do anything, but today it's looking pretty decent right from open. It's up 3.5%, and it looks like it's still holding its ground.
Yeah, it is. That's great to see. I really hope this one keeps running, Mike. If it breaks the highs around like $74.50 or $75, I'll really eye this one up. And looking at this one on the daily, it's had such a good week. Like, if it starts to break out, I'll think it could start to have a pretty good run. The last time it started really running, it ran like all the way up to 175 within those, couple days there. So hopefully we do start to see that awesome breakout. And, this one would be a really good candidate for a day trade if it breaks this high.
Yeah, no doubt. Alrighty, so then we have Alex saying, what are some resistance levels for Apple and AMD? So Apple and AMD, Tom, what do you have for resistance?
I actually just deleted all of my levels on Apple last night, believe it or not, because my chart was just so cluttered with them. But I'm seeing intraday today, there's definitely going to be a pretty big resistance here right at 174 with Apple. And then after 174, 175 does seem like a little bit of one as well. But the major one after 174, I'm going to look at it, is all the way up here at 177. But I will say 174 seems like a pretty big level.
All right, sounds good. But let's say we blast through 174. What's next?
The next one intraday is going to be 175. But keep in mind, that's not as defined, I would say, as these levels up here around 176.50 to 177. So if we do blast through 174, I'll probably look at, 176.50 to 177 up here.
All right, sounds good. And then we have AMD. So AMD, let's take a look. What do you have for resistance on this one?
Yeah, this one I actually still have the drawings on, of course, but it looks like they're actually right around this 135 resistance here. I do have one right at 135. After we blast through that, I could see AMD going up to 138, and then after that, 140. So I do see AMD having some pretty good potential if it can move today. It's just that we're so close to a lot of these resistances, and I will say there's a lot coming up on this one. So there's no clear breakouts in my opinion here, but there's a huge support around 132 and then 130. So I really like that support if it ends up holding.
Yeah, and I'm even seeing a little bit of resistance right around 136 on this one as well. I feel like AMD has a lot of resistance levels overhead right now. It's up 1.5% today, but it's I feel like there's so many different points where, we might see sellers come in where I don't know if it's going to be worth playing to the upside at this point.
Yeah, exactly. I see that as well, exactly at 136. And like you said, whenever there's so many resistances like that, it might be pretty choppy too, which would make it hard. It might, hit 136, pop back down to 134, and then finally go up to 138 or, something crazy like that. So definitely be careful with it. It's going to have some crazy movement today, probably off all these levels.
For sure, for sure. All right, Tom. So looking at a couple different plays today, I will. Yeah, I mean, I just checked the breakout scanners a couple of times, and it seems like right now the only thing that's like really moving is AMD, which we just covered. But besides that, even AMD's not moving like amazingly. I mean, I know a couple other chip stocks are looking decent, like Qualcomm, but I don't know, Tom. It looks like a kind of like a bad day.
Yeah, it does. And even as these chip stocks go up, kind of like what we talked about with AMD, there's just so much overhead resistance. It's going to be a little hard to play them. And while Qualcomm's having a good day, it's still only up like 1.6% because of all that bad pre-market movement. So yeah, it's not looking too good here. The one stock I'm still curious of though, Mike, is LVS. That one's actually back on the rise. If this one ends up breaking $43 right here, this one might be a pretty good candidate.
Yeah, that's actually a good point. Definitely a decent setup right there. Just remember, like we talked about earlier in the stream, shares would probably be ideal. I mean, if you are only going to hold for like a day, then options should be fine. But besides that, shares should be pretty decent. And like honestly, like let's say you just grab some shares, like it's not at a bad level even for like a longer term play. And like even if you check out like a max weekly chart, Tom, like it is bouncing off of a huge support right around like $35 a share. It touched this level once in like March of 2020 and touched it again in January of 2016, and then it touched it again in July of 2012. So like it has a pretty good history of like bouncing off of this level, and it seems like every time it does bounce, like it normally like hits like anywhere from like $55 to $60 a share.
Man, this thing was even bouncing off this level back in 2005. Like what? Like what? This is a huge support. So yeah, I mean, this is definitely good, I think, for the longer term, Mike. And with that good news coming out of China, you almost can't get better news out of a company like LVS that's been actually falling on bad China news. So it's great to see that they got that good news come out of, what do you say it was, Macau?
Yeah.
Yeah, that's great to see it. That's their big gambling city, isn't it?
Exactly. Yep.
Yeah, that's going to be crazy. I know I've seen pictures of that city, Mike. It's crazy to see how much casinos and stuff are there. Like, you would never expect something like that in the United States because over there they just have so many people that it's just insane to see how the city's built. But yeah, I mean, it's awesome to see them moving, and that's a huge support, Mike. You're right. I mean, that really makes it honestly a little bit better for shares, in my opinion. And yeah, I'm really going to eye this one up for a longer term play.
I mean, Tom, it's almost tempting to like just like sell an at the money put. Like, let's say you went to like the February expiration and you sold like I mean, maybe not at the money, but let's say you sold like the 40, let's say you sold the 40 strike put. You'll get paid like $150 cash today. In the worst case scenario, you buy shares at 40, which is still a good level, but your cost basis would essentially be brought down to like $38.50. So it's like, at the end of the day, you're really buying shares at $38.50, and it's not bad, especially with the good catalyst that just came out, this huge bounce off support, and I don't know, it's just a potential idea.
Yeah, and I really like these companies because they're almost like in a sector of their own. You know what I mean?
Yeah.
Like we're seeing the SPY and the banks just get totally demolished today. And then these well, I shouldn't say the SPY, but the banks anyways are getting demolished and dragging lots of other stocks down, especially in pre-market. And these stocks held up, and I really like that because if we do start seeing a hit in the overall market because of inflation or just because of a transition or just anything, I think that these stocks will hold up pretty well.
Yeah, I definitely agree with you there. I'm actually pulling up the correlation between LVS and the SPY right now. So while this loads up, how about we take a look at the SPY? How's it looking so far today?
Yeah, today it's coming right back. I know pre-market was pretty bad, but ever since market open, we bounced right off of that 460 resistance in pre-market, and we're coming right back up. So that's good to see. I will say, though, it's going to be a tough day. Like we're seeing with AMD, there's lots of overhead resistance, and I expect it to get pretty choppy, especially if we head back up. Like we're heading up into this 464 resistance, and then after that, we're going to have major levels at 466, then 468. So there's definitely lots of overhead levels to look at today.
Sounds good. So I have the correlation between LVS and SPY loaded up. Over the past year, the correlation is negative 0.82. So for the most part, when the market's down, LVS is up, and when LVS is down, the market's up. So of course, that doesn't mean that this will continue for the next year or anything like that. But historically speaking, they do move in an opposite way, which is pretty interesting. So like I guess you can like kind of say LVS is like a hedge to the SPY, kind of, not fully, but I don't know. I just think it's interesting, especially at this level. It's not bad for shares, and even if the market did continue to tank down, LVS should be able to hold its ground better than other stocks in other sectors.
Yeah, that would be pretty big. And, Mike, I actually am looking at some crazy news coming across the SPY today. Apparently, the U.S. confirms a ballistic missile launch by North Korea this morning. Maybe that could have something to do with this stuff going down, too.
Really? I didn't see that. Interesting.
Yeah, it's actually coming right through I actually just have it pulled up right here. We can see, U.S. confirms ballistic missile launch by North Korea as of a VOA reporter. So that's crazy to see. And anytime we get crazy news like that, it can definitely dampen the market. But yeah, I still think the main movement was probably the banks today rather than that.
Yeah, no doubt. But still, it could add some fear into the market. So it's definitely not good.
And look at this news about JP Morgan CEO says there could be 6 or 7 rate hikes this year. Man, I think Jamie Dimon's a little off his rocker here. I don't know. I don't think we'll see 6 or 7, but I could see maybe 4 or something close.
Yeah, I agree. He's probably hoping we see 6 or 7. He'd probably love that for his.
Yeah, you're probably right.
Yeah, so interesting. But yeah, a lot of other stocks would probably take a hit if we saw 6 or 7 hikes. That would be pretty rough. But then again, like if inflation just like continues to get out of hand, like they're going to have to do what they're going to have to do to fix the problem. So we have a lot of stuff going on, like just in the economy and just the world right now. So it's crazy. And then Hunter goes, Christ, 6 or 7, I'm going to go poor. I know. I mean, if we saw 6 or 7, I think a lot of stocks would take a huge beating. Like I feel like a lot of these growth companies especially have mainly priced in a good amount of the rate hikes, but 6 or 7 would be pretty bad. So
man, we might see A&D and some of these big tech stocks start to tumble back down to some of these big supports.
I know, and we probably see gold and silver.
Yeah, that actually is pretty. Mike, I did want to bring up gold and silver because I will say it's setting up pretty well on the daily chart. We're starting to really pop above some of these major resistance levels here, especially like 170 has been a pretty big level, and if we end up holding this, it might be pretty good, especially as we're breaking these long-term trend lines too.
Yeah, and it's been holding up pretty well. Like gold is it's one of those assets where it's like, yeah, it's not going to perform like a Tesla, but at the same time, it kind of like provides I guess you could just say safety that other assets can't. Like, gold's been used for thousands and thousands of years, and it's probably not going anywhere, so it's just like a really safe asset, obviously. At the same time, it moves very slowly, but, if you can get, I guess you could say GLD or SLV shares at a good level, like, a lot of times it acts as a good hedge, and who knows, sometimes you could get a pretty good return on your investment.
Yeah, and with inflation going up, I really like them right now. Like, you would think that these metals would do pretty well, especially as people start to hedge their money here into these metals. I think that'll be good. And, we also talked about Bitcoin the other week, Mike, as also being a pretty good potential hedge. And, gold's doing pretty well today. I'm actually kind of curious to see how well Bitcoin's doing. And actually, I will say Bitcoin was going down early in the morning, but wow, it exploded right back up. And honestly, we're right back up above that 42,000 support here.
There we go. All right, and then we had Raymond saying AAL is falling, but slowly but steadily with a question mark. So AAL, yeah, I would say that. It looks like they have earnings. Is that next week? Let me see. It looks like they have earnings on the 20th. So yeah, it's just consolidating right now.
Yeah, it is. It's going to be crazy next week, I think, for some of these airlines. And I hate to see them go down today after having a pretty good day yesterday. I really thought yesterday was a pretty explosive for some of these companies, and I was going to maybe look for like a breakout maybe up above $20 for AAL. But yeah, it looks like we're pulling back this morning, like with some of the banks. And, I want to go ahead and like look at Boeing. Boeing's holding up a little bit better than AAL is. And if I go look at like DAL, though, it's also down with American, which is not good. And, I will say Delta, they were moving pretty well yesterday off their earnings, which was, good to see, especially with all that crazy news with inflation and everything.
True. All right, and then we had George saying CRWD is moving, CrowdStrike. So CRWD, yeah, it's looking pretty good. It's up 3.5%. It's at a pretty good level. Just a couple months ago, it was at 300, and now it's at 180. So it's not looking too bad. Yeah, I mean, it's good to see it popping up.
Yeah, I'm glad to see it up today, right off that big support too. Like I see a pretty big support, right around 175, maybe a little bit lower, like 170, but in the end, it got pretty close and it's moving well. I will say though, it's still not my favorite setup right here. Like with the way we started to break support, it's still a little bit scary, but I'll definitely be eyeing it up for a longer term play here over the next couple of weeks. I feel like it's kind of like a Zoom at this point. It's just been going down with the rest of growth.
Gotcha. Tom, one stock I saw that's moving kind of good is Walmart. It's only up 0.6%, which I know it's not a lot, but for a value stock, it's pretty decent. And to put that into like perspective on the options chain, like some of the options that expired today on Walmart, they're up anywhere from 72 to almost to, or I mean, I guess you say 72 to like 150%. And then, like, even if we went out to February, like, a lot of these calls are up, like, 25 to, yeah, I guess you'd say 25%. So even though it's only a 0.6% move, the options market is liking it, obviously. And I will say Walmart has been holding its ground pretty well, and, like, it's not looking bad. And at the same time, over, like, the past couple months, we saw a lot of value plays like Coca-Cola and even Procter & Gamble show some amazing, amazing movement where they actually broke highs, where on the other hand, Walmart has been kind of just like lingering around, not doing too much. So, maybe we'll see like a late breakout.
Yeah, maybe we will. I could maybe see it. It looks like a pretty good setup here. I love how they're kind of bouncing off this like 142.50 support as well. I think it looks really good here in the short term. And yeah, I mean, I could at least see us retesting this 150 resistance, if not breaking that, like you said, and making some new highs.
Yeah. All right, so I just want to welcome everyone to the stream really quickly. Thank you guys so much for joining, and welcome Keisha, George, Sam, Vicky, I'm Fierce, Rick, Alex, the other Sam, Hunter, Jerry, California, Sean, and we've got George. Welcome Mike, welcome Raymond. So yeah, thank you guys so much for joining. Market's it's okay today. I definitely wouldn't say it's good, Tom, but for some stocks, it's really good, like we have LVS pulled up.
Yeah, it's crazy to see how it's doing this well today. I know they had that good news. It looks like they are starting to pull back on the 1 minute chart, but they're starting to get up to some crazy levels, Mike, up 14% almost right now. Like, yeah, it's getting kind of crazy. They just started breaking that 43 resistance. Unfortunately, they only ran 50 cents up to 43.50, but at least they broke out a little bit. And, I could maybe see them holding their ground and maybe going up later today, but I will say they had a pretty good pop, and if they do consolidate a little bit, they'll still be up like 10%.
Yeah, no doubt. So looking at a couple different plays right now. So we have Mike saying, good morning. Are you guys still holding DraftKings? I'm getting killed. I'm definitely still holding. It's a longer term play. Short term, it's been brutal. But one thing to keep in mind is it's not specific to DraftKings. Whether you're looking at DraftKings or Palantir or Zoom or Chewy or Redfin or AI or literally like almost any other growth play, we're seeing this type of movement. Same thing with ChargePoint, same thing with Teladoc, same thing, I already said Palantir, same thing with Run. Like even Square is taking a huge hit. Chewy, Beyond, Upwork, like almost any growth play is getting destroyed right now. So obviously it's really not good news, but it is, I guess you'd say, somewhat settling to know that the negative movement we're seeing with DraftKings isn't because DraftKings is like, having like a bad catalyst. Like they're actually doing pretty well. They actually just had that deal with Oregon, which is good, and their lottery. They just legalized, or they just launched their sports betting in New York right ahead of the Super Bowl and right ahead of the national championship as well. But yeah, I mean, it's been brutal. It's definitely a longer term play. The main thing causing this selling pressure is one, well, initially it was rising rates, but then two, when it rains, it pours. So when we see selling pressure come in, we have short sellers come in and drive the stock lower. And then when we have the stock driven lower because of short sellers, people who've been bag holding DraftKings for, at whatever price point, they say, wow, DraftKings just fell from $40 down to 23. Is it going to fall from 23 down to 5? And then they are considering selling, which just makes the movement that much worse. So with everything being said, I'm definitely still holding it. It's this type of negative movement is with almost any growth stock you can see right now. Like I pointed out, even Zoom is taking a hit, and they're in actually a pretty good financial position. So it just sucks to see, but if you are looking to hedge your position, there are a couple things you can do. With, like, let's say DraftKings specifically, if you're holding shares, you can buy puts, which is a protective put, which can definitely help out. You can sell covered calls, or, those are like the main two ways to go. If you want to get advanced, you can implement a repair strategy, which I made a video on this like a couple months ago. But I would say the main thing is either buying puts or selling covered calls.
Yeah, me too. That's going to be the main way to go probably. But yeah, it's going to be tough. Like I'm even down on my shares. So you just have to keep holding, like you have to trust these companies for the longer term. And, with the way the DraftKings is becoming implemented, and also with the way states are still needing to legalize with some big ones like Florida, Texas, California, if we get all of those legalized, it'll be huge for DraftKings. And, obviously, but they just launched in New York. So maybe their next earnings report will be a little bit better. We still have about a month out, I believe, on that. Yeah, it looks like almost exactly a month. It's going to come out on on February 18th. So definitely look out for that. It's going to be probably a pretty crazy week that week, but hopefully they come in with some good numbers, especially with all these big events going on, like the national championship, the Super Bowl, and everything like that. I believe the Super Bowl is like 4 days ahead of the earnings. Or 4 days after, or what is it? Is the Super Bowl, I think, is on the 14th, I believe.
Yeah, so I think it's a couple days before, which should be good, because hopefully we'll get that those numbers included in the report. So that's good. And then another thing is, like, if you don't believe in, whether it's Palantir, DraftKings, Zoom, Redfin, AI, anything, if you don't believe in the company, then it might make sense to sell. But as someone who really believes in the company, obviously I'm going to keep holding. But if you are looking to protect yourself, you can always buy puts. That's just one thing you can do. And then related to this, California said, what DraftKings options are you holding? So I'm mainly short a lot of puts on it. Honestly, at this point, if you wanted to grab calls, it could be good. I have some like 45 straight calls that expire like far out, we can say that. But honestly, shares would be the best way to go, California. Like, I know as an options trader, you think, oh, shares, no, I'm not going to do that. But if you just grab shares and hold them at this price point, it'll be less risky, and honestly, you'll probably get a higher return. So if you're looking to enter a new position, shares would probably be ideal.
Yeah, they really will be. I think that'll be a lot better to look at going forward. And, I know that everyone wants to trade options, like you said, Mike, especially us being options traders. It's so tempting to just grab calls and stuff, but also keep in mind the IV is a little bit high. If we see the stock start to fly up, that IV might start to come down a little bit. So if, definitely start to look at that. And, I will say the shares, I think, will be a lot better. Or like you said, Mike, even shorting puts. Like if you want shares really bad right now and you really like DraftKings, just, you could short like the 22 strikes. You could even do the 20 strike at this point. Even if you wanted to get a little risky, you could do like the 30 in the money strike. That'll be pretty good. You'll get some crazy premiums back on some of these. And, I think that's the way I would go personally.
For sure. Yeah. Especially with IV kind of high, plus the stock at a low level, it's pretty good, especially for short puts. But yeah, looking at a couple other plays right now, it looks like LVS is still going, Tom. Now we're up 15%.
Yeah, it's having some choppy movement, but it just keeps breaking. It's crazy to see it moving like this. And Yeah, these China stocks, or I should say the gambling China stocks are going crazy. Like LVS and Win, even Win, like ended up holding its intraday support here, like right around 89.50. Got some pretty good bounces back to the upside. I wonder if they'll end up breaking too.
Here we go. And then we have Vicky saying there were 17.5 million bets last week in the New York State, and it was called "quote unquote" amazing numbers. So there we go. And I actually got an email from DraftKings the other day saying like if you know someone in New York and you refer them to DraftKings, like you'll both get I don't know, it was just like a bonus, like $20 or something like that. But yeah, they're definitely working hard to establish their, I guess you could say, their market dominance in New York. Hopefully it plays out pretty well. They're spending a ton of money on marketing, so I would definitely assume that the odds are in their favor. So that's pretty big, and I know that they're when they launched in Arizona, like they didn't even do too much advertising in Arizona, and they had some pretty awesome numbers.
Yeah, and they have a lot of stuff going on as far as like the NFT business and everything like that as well. And then they've been making these big deals, Mike, with like the NFL, the NHL, and I don't know exactly all of the sports, but tons of different sports they've been making these big deals with. And like before the game start, like you see DraftKings like printed like right in the middle of these football fields and all over the sides of these hockey rinks and all this stuff. So it's crazy to see that. And I'm glad to see that they do that referral program. That's going to be pretty big. And I really hope to see a lot of these banks or a lot of these sports gambling companies do better. Like whether it's DraftKings, whether it's whether it's MGM, whether it's any of them, I think that it's honestly going to be good for the future. And I know Caesars has been trying to get into it, and I think that Caesars was the other one talked about with the Disney deal, wasn't it?
Yeah, exactly. But let's even check out Caesars. Like even that's struggling. Like like ever since here, let me pull this up. Hold on. So Caesars kind of topped out around, I guess you can say, the beginning of October is when like it really hit resistance, and then DraftKings, yeah, I mean it was basically the same thing. That's right before it tanked off. So like I guess it's good to see that they're both falling at the same time, because like I guess it'd be like a little bit more unsettling like if we saw like I don't know DraftKings down 40% and then Caesars was down 5%. That's kind of like I don't even know. That's like Facebook being down 50% and then Snapchat's only down like 5%. Like like sometimes that might be a little concerning, but I guess it's decent that they're both falling. But even like you pointed out with Caesars, like they're even at pretty low levels. They're at like that 85 support, and it looks like they've actually touched this multiple times over the past year.
Yeah, if they end up breaking this, it might not be good in the short term, but it'll probably be a good longer term pickup. And Caesars has a lot to do with like their hotels and stuff like that too. So that could be another reason why they're also falling. But it's going to be crazy just to see how these companies start to innovate and how everything ends up playing out, because it's only legal in a few states right now. And I feel like once the overall country starts to get a look at these, we'll start to see these companies finally start to get this good revenue that we've been waiting for. I know people in the chat have been saying different stuff about DraftKings. Like a lot of people have been saying analysts have been like expecting that they won't be profitable till 2024 or 2026 or, whenever the analyst on that specific circumstance said. But just keep in mind, these analysts sometimes just throw things out there. And at the same time, a lot of these growth companies weren't profitable for years. Mike, I know you mentioned Tesla wasn't profitable until 2020. And, man, they've been around since what, like 2004?
They've been around for a while. And that's a great point, Tom, because one, analysts, sometimes they say some crazy things. But then two, like Tesla's first profitable year was in 2020. And then like, if you're just waiting for a company to, I guess, officially become profitable, you would have missed out on a ton of gains. Like when Tesla was overall losing money, let's say back in 2019, you could have scooped up shares for $40, and right now they're at over $1,000. And just a couple weeks ago, it was at $1,243 a share. So it's like sometimes you have to watch out what you read from analysts as well as some of the headlines you read, because in the same way that like I guess you could say banks or institutions can manipulate prices with like earnings, like or not earnings, with like upgrades and downgrades, these short sellers, they'll do anything to get that stock to drop. Like, if an institution's going to take a huge short position on any company, a lot of times they'll just put out a bunch of bad press with it as well.
Yeah, and I think we saw that with DraftKings, didn't we? I think wasn't Hindenburg the company that was really hitting DraftKings hard, and it wasn't just them. I saw a few analysts trying to really hit them hard.
No doubt. So there's a lot of shady stuff that goes on in the market, to say the least. But the important thing is, if you have a company that you like for the long term and it's at a good level, it doesn't make sense. It does not make sense to sell it low. So either way, good stuff there. We have S saying AMC may recover. So I hope it does if you're in it. I personally think it's unlikely. Of course, anything is possible. If you're in it, I hope it recovers. I just feel like, given everything going on, I feel like that's an unlikely event, mainly because AMC is basically a meme stock, and meme stocks move off of hype. Like, no one's buying AMC for their fundamentals right now. No one, especially when the shares were at $70 each. So clearly no one's buying for their fundamentals, and I believe even on Wall Street Bets they say it's not about the fundamentals. But anyways, if we're playing this off of a potential short squeeze, and we know that hedge funds benefit when the stock goes lower, especially when it takes a long time, like over long periods of time, and that's exactly what we've seen over the past year. I just feel like the hedge funds are in a much, much better position than they were in May and June, and there are so many ways for hedge funds to hedge themselves, whether it be using the options chain or even other methods that we don't even know about. So with that being said, I just feel like at this point it's unlikely to see like a full recovery, and I hope I'm wrong, but I just feel like at this point we're just seeing like a slow drop, Tom.
Yeah, and I know so many people with a lot of money in this stock, and I really hope that it goes up for them. But, I will say it's not looking good. It's been having lots of bad movement, even off of technicals. It's been awful. Like, a lot of these Wall Street Bets traders are big technical traders too. And, some of them, I guess. And, they're always drawing these crazy setups and all that. And, I would say AMC has been moving off this top trend line to the downside in a pretty bad way. If we fall below 20, I'd be pretty careful with it. If we do end up holding $20 and it starts bouncing back, maybe it'll be a good play if you can maybe do something at $20. But in the end, I'm with Mike. I don't think it's going to do anything too well. And I really don't like the technicals I'm seeing on this. We've really failed to break this trend line so many times. It's not good here.
Yeah, and then S said, so S said AMC, I think Wall Street Bets, ego, and revenge. So that's the potential catalyst for a recovery in S's opinion. I feel like at this point it's not going to work, and I hope it does if you're in it. But just trying to be honest, like, if we go over to Wall Street Bets, it's a mess right now. Like, yeah, okay, last year everyone was talking about GameStop and AMC, but at this point it's like they're talking about Nvidia, and they're talking about Wish, and then they're talking about AMD, and then Tesla, and then Roblox, and it's like it's unorganized at this point. So like, let's say they can get organized, which I don't think is likely. Let's say they even can get like fully organized and they can unite into one stock. A lot of them already lost too much on AMC, or there's not much left, like there's not enough buying power left to bring it back up. And then let's say another thing, let's say they can even do that, and then they can, revenge and all buy the stock at once. According to FinViz at least, and I know a lot of people on Wall Street Bets say the short float's a lot higher, but the short float now is only reported at 18.5%. Whether that's true or not, I guess, is up for debate. But it's like, I don't know. I don't see it happening. And hopefully it does pop up, but it's not looking good.
Yeah, it's not good here. And then, we have a lot of these big traders. Like, I go on Wall Street Bets, Mike, and, here's the first thing I see, someone losing $124,000 on GameStop, down 52%. Days P&L, they lost $4,000 today, down 3.7%. I've seen so many situations like this, and it's so unfortunate to see. And I really hope that some people really take the advice. Like, look at all these pictures on Wall Street Bets of these people losing all this money. That should be telling of itself. Like, very, very few people on there really won. Of course, a few people won in the beginning and they made some crazy money, but besides those few people in the beginning, we got to keep in mind, like, 95% of people still probably ended up losing on this, which is obviously a bad scenario.
Yep. All right. We have Hunter saying he just got accepted to MBA school. There we go, Hunter. I know you've been working really hard lately, so I'm really happy for you. And there we go. Awesome.
MBA, Masters of Business Administration, right?
Think so. Let's go, Hunter. Let's go. All right. So we have Brian saying adding Starbucks to the long term. Starbucks is so low, it's a no-brainer. Yeah, it is pretty low. It's at a good level. It's bouncing off that 100 support. So, yeah, it's actually looking pretty good.
Yeah, it is. I like that support right at $100 even. I think that'll be big. That's a huge psychological level as well. This is going to be awesome, I think. And actually, this is a huge support, Mike. I'm actually going to plot this one on the chart. This is a big level that we've touched at a few times in the past. Of course, $100 is always a big psychological level. But, yeah, I mean, it's nice to see it bouncing here. And I would say for the longer term, this would be a pretty good pickup, and it's pretty safe. I think Starbucks is a pretty good company, and I think that they're not going to go anywhere in the next few years.
Yeah, and Tom, like we always say, whenever we just like drive past a Starbucks, like you can almost guarantee that there's a line wrapping around the building.
Yeah, every single time. I've never seen it just quiet there ever.
Yeah. Oh gosh. And then let's see. Then we have George saying thoughts on entering PayPal for the long term here. It looks good, of course, with the way the market's been moving. Only God knows where the bottom is, but it's at a good price. It's at a pretty decent support. Looking at PayPal, Tom, it's growing a lot over the past couple of years. I like it. It's just the only thing is I don't know if this is the bottom, but then again, no one does. Shares would be ideal, obviously, and probably dollar cost averaging will be the way to go.
Yeah, I think that'll be the best way to go as well. I think PayPal's been an awesome stock down here. And, if you average in, it'll be pretty good. We're right around a major support at 175. Even if it does break 175, there's another big one at 150. And if you average in, you could get right between there. And that'll be an awesome level for the long term. And, PayPal's been pretty established. So I think there'll be a pretty big payment system for the future too.
Yep. All right, let's see. What else do we have? We have Iranical saying Facebook moving good. Let's take a look at Facebook. Yeah, it's having a pretty good day so far.
Yeah, Facebook looks like it's doing pretty decent today. It's up 1.38%. The 5-minute chart looks pretty good, like you said, and we are getting up to some of these resistance levels, kind of like we said earlier. There was lots of overhead resistance on some of these stocks. Facebook did hit the first resistance at 330. Slowed down a little bit. Now it broke up through that, and we're going to be retesting the next one here right around 332.50. So hopefully we can get a nice break through that too.
There we go. And then we have Hunter saying, sheesh, gonna concentrate in finance and make the stocked up homies rich. Oh gosh, but yeah, congratulations, Hunter. Definitely very excited for you. And hopefully we see a nice pop with some of these growth plays to have a good start to the year, because it's been a rough past couple months.
Yeah, it really has. I really hope we can get these growth stocks back up. Hunter, hopefully you can make us some type of algorithm that'll find the bottom of these growth stocks, because man, that'll be huge for the next few months. And obviously that's going to be a big thing going forward, Mike, is obviously like these stocks are all going down, they're all kind of dipping, and it's just where's the bottom finally going to be at? It seems like we're going to be breaking these supports again here, and it's just it's going to be crazy to see how low some of these might go, especially if this bad news keeps dragging the market down.
I know. Not good. All right, Tom. Well, do you have any last-minute plays before we wrap up the stream?
I want to go check those banks again to see how they're doing. It looks like JP Morgan's coming back up a little bit today, which is good to see. I'm glad to see it back up above $160. That's good. Bank of America actually came back quite a bit. They're only down 1.4% now. So that's great to see that some of these are coming back. I wonder, if Goldman's doing well. And yeah, Goldman's doing pretty decent as well, back to the upside. So hopefully the banks keep recovering. Looks like the SPY is also recovering back. So I don't know. It's going to be a pretty slow day, probably, Mike. Like we said, these stocks are probably going to recover and then start to, slow down eventually throughout the day. So yeah, it looks like a pretty crazy end of the week with the way that those bank stocks dropped. But I will say, this week was not the worst, not the best. The SPY was all over the place, but it did make for some pretty good intraday moves.
No doubt. So yeah, it's been a wild week, Tom. Seriously, especially yesterday, and then who knows what's going to happen for the rest of the day today. Like a lot of times when we see stocks gap down like this and then run up, like it's just like 50-50. Like we had the market kind of tank. I mean, it's not tanking now, but it's selling off over like the past couple of minutes and just kind of looking weak. So yeah, we're definitely set for a volatile rest of the day. With that being said, we really appreciate all of you guys for joining the stream. We had a great time. Hopefully the market picks up to end the day. But besides that, have an amazing weekend.